Hello, welcome back. This is Si Wing Yi, and nice to see you guys again. So today, let me share my screen. I'm going to go over the housing forecast by CoreLogic. All right, so without further ado, let's get started. This article just came out yesterday, I believe. So, and the title, November the 1st. The title is U.S. Home Price Insights, November 2022 by CoreLogic. All right, so anyway, CoreLogic Home Price Index is designed to provide an early indication of home price trends. So this organization been around for a very long time. They have very good metrics to come up with their forecast. All right, so home price index national change, September 2022. So let's begin based on my yellow highlights. Home prices nationwide, including distressed sales, increased year over year by 11% in September 2022 compared to September 21. All right, so that's a good sign. So people that purchase homes for own occupied homes or investment homes for investors, your even this past year or from year over year, your homes make money. You make money. You make equity. You know what does that mean? That means you're getting wealthier. See what happens when you buy real estate and wait instead of wait to buy real estate. Okay, I digress. All right, so the forecast prices nationally. Okay, this is the national big picture highlights. The CoreLogic Home Price Index forecast indicates that home prices will increase on a month-to-month basis by 0.0% from September 22 to October 22, which is month over month only, and on a year-over-year basis by 3.9% appreciation from September 22 to September 23. So evidently, CoreLogic is doing a 1-year real estate forecast for the nation as a whole. All right, so here's the graph of what's going on, and based on current scenario, on a month-to-month, it's a half of 1% decrease, and year-over-year, 11.4% decrease. And then the forecast, it calls for the next 12 months, 3.9% appreciation increase housing forecast by CoreLogic. So you take it with a grain of salt for what it is. I know we talk about national real estate market. To me, there's no such thing as a national real estate market. Is that real estate is very local. It's local not only to a particular city or a particular region or particular metro, if you will. It's really local down to the neighborhood and down to a specific house or a list of houses in that street, in that block of street. That's how it is. So whether you're a primary homeowner or whether you're a real estate investor, the way you do your research is target a specific market, a local market that you like for primary home purchase, for investment purchases, and study the heck out of it, and then pull the trigger at that time. Because, like I said, there's no such thing as the real estate market, right? If you learn nothing more than what I just said, then there's a good takeaway for you guys for today. That is. All right, let's get back to this article. HPI home price index and Case-Shiller. CoreLogic is part of the Case-Shiller. They've been around for a very, very long time, so they are very, very credible. Okay, so the home price index, as we all know, I mean, almost every year, consistently for many, many decades, home prices have consistently increased, with one big exception, of course. 2008 housing crash is an anomaly. It just rarely ever happened in past 100 years. That's the It's the only time 2008 was the only crash. And, there's a lot of reasons. I'm sure most of you understood why, because of the subprime mortgages and people have no business qualifying to get a mortgage. They got one. We're talking hairdresser in Las Vegas making $8 an hour. They were able to buy 10 houses with this no doc loan, liar loans, all those things. But today, there's really no real estate crash uh, because today's market is completely different. And I'm not going to go through there. You have other educational resources available to you to explain why today's market is a very, very 100% different than the 2008 housing crash market. All right. So anyway, let's continue with this article. I digress. By migration patterns continue to drive price growth in the Southeast. Look, I kid you not. Look, as a real estate investor, as the owner of a real estate company, I've been helping my real estate investors, thousands of them, to go out of state, go to South and Southeast to buy investment properties, cash flow properties. And my investors have done very, very well because I knew that. Okay, I know Southeast is the path of growth for the past, not just currently, but for the past 20 years. So CoreLogic just validate what I already know 2 decades ago. Okay. All right. Okay. I digress. All right. Migration patterns continue to drive price growth in the Southeast. That is so true. So let's dive deep into this. Southeastern states put up significantly higher price gains than the national growth rate, with Florida again leading the country for the 8th consecutive month. That's why I have many investors that are buying in Florida, our investors, for very high cash flow. Well, not very high cash flow, moderate cash flow to a lot of good potential. Very affordable still for investors. Anyway, although rising mortgage rates continue to dampen housing demand nationwide, out migration, so people moving from other locations into a particular location, out migration from more expensive states on the West Coast, California, where I live, Bay Area, and in the Northeast, New York State, New York City, New Jersey, Connecticut, Massachusetts. So those high cost areas is likely fueling home buyer enthusiasm for properties in relatively more affordable southeastern states. Much more affordable. Hear that? People out there, that is the future of real estate investments, Southeast. You know what? Southeast is Texas, Alabama, Georgia, Florida, a little bit of South Carolina, a little bit of North Carolina. Yeah, in those areas. I love Florida and Texas mainly, and Alabama is close third. CoreLogic expects annual U.S. home price growth to continue to slow over the next 12 months to 3.9% by September 23. That's good news, right? Isn't that good news? Because they are not predicting a crash. CoreLogic is predicting year over year from September of 2022, just a few months ago, to September 2023, this 1 year forecast, price will grow 4% nationwide on the average. Right? I know local market is different, but it's a good sign. It's a good sign that at least they are not projecting a real estate crash or a bubble or whatever you want to call it. So yeah, so there's no need to be scared or to be paralyzed or to be intimidated by what's going on with all the negative headlines. You just block those noises out and focus on your own personal real estate goals. Okay, focus on your personal economy. Don't worry. You cannot control the general economy. You can control your own personal economy. Agree? Does that make sense? Do you agree with me? All right. Anyway, all right. Let's get back. All right. The rapid increase in prices during COVID-19 pandemic caused many U.S. housing markets to reach completely unaffordable levels for potential local home buyers. Oh yeah. On the West Coast and the Mountain West states, home prices are slowing from this spring's high, but remain elevated from a year ago. By contrast, markets that continue to see on an in-migration of higher income households are still experiencing home price gains that are notably higher than the national rate of appreciation. I think they're talking about the South and Southeast, Austin, San Antonio, Texas. That's what's going on. You have a lot of high income households, high tech Austin. I know there's some price reductions in Austin for the time being, mainly new construction of builders lowering their prices. There are some resales that have a fairly deep decline in Austin, but overall they're going to come back. Austin can come back because they are experiencing a lot of high income, high tech millennials moving into Austin, Silicon Valley 2.0, Austin, Texas, and then Florida, right? Florida is amazing. My investors are investing very heavily in Florida and in Texas and in Alabama and a few other places. So anyway, I mean, when I say my investors, they are just regular guys, average Joe, mom and pop investors. I'm not talking about, Wall Street, the hedge funds. I'm not talking about institutions and buyers out there. I mean, yeah, they have billions of dollars to enter the real estate market, and they are doing it. But I'm representing mom and pop investors like you folks out there that have a regular full-time job that want to diversify into real estate. Because it's a very stable real estate asset, historically speaking. Okay, let's continue. So let's look at the national map, August 22. The state with the highest increases year over year were Florida, 23%, South Carolina, 17.6%, and Tennessee, 17.4%. Again, we have we have a local team available in selected markets in Florida that are helping our out-of-state investors to buy cash flow properties in Florida and also in Tennessee as well. Tennessee is up and coming. A lot of people are not aware of it. So we have teams available in Tennessee to help people, out-of-state investors, to buy turnkey cash flow properties, very affordable, that rents very well, cash flows, great rental market. Right, you see the dark areas signifies the potential growth for this coming year, which is clearly in the South and Southeast, mainly in Florida, which is 20% year over year change potentially in Florida. Then 15 to 20, or a little bit lighter color, which is right around here, Tennessee, North Carolina, South Carolina, and Georgia. Then the light blue is right in the middle ground, 10 to 15% change year over year, which is located in the South, and which is Texas right here, Oklahoma, Arkansas, Alabama, Mississippi, Arizona, and New Mexico, Nevada, and over here, Colorado. Montana? I don't know about Montana. Does anybody live in Montana? I don't know. Northeast, Midwest, Midwest is surprising. I mean, what about Midwest? It's very, historically, Midwest is a rust, what you call it, a rust belt state, and whereas the South and Southeast and the West is like a sun belt. But the rust belt states in Midwest, they are doing well. Their housing markets have not crashed by any means. And in some of the markets in the Midwest, they have appreciated double digit, even during the pandemic, double digit in appreciation. You did not know that, did you? Well, now you know. All right. So what else I need to talk about? Markets to watch. Top market at risk of home price decline. Now, I'm not sure why CoreLogic, this graph was shown several times over in the past few months. I don't know why CoreLogic picked on these markets. I don't know anything about these markets because I don't, myself and my investors, we don't go to the Pacific Northwest. Why are they picking Pacific Northwest? Except one exception, Destin, Florida. Destin, Florida is, the upper Gulf Coast by the Panhandle. But Destin, the city of Destin itself is a vacation resort. Is a very upscale and it's a good area. Never heard of Crestview. Fort Walton Beach is a very high risk of price decline. Bremerton, Silverdale, which is a suburb of Seattle. Why? Why the suburb of Seattle have a high risk of a market decline? I need to do some research, right? And I will. If you guys want me to do a video on some of these markets, I will do so. Tacoma, again, the suburb of Seattle, very, very bizarre. Why CoreLogic? These suburbs are not a big boom town, I don't think. Eugene, Oregon is a small little town. It's Nike country, I think, right? Eugene, Oregon. Bellingham, Washington. Why they pick on Washington? Bremerton, Silverdale. I'm not familiar with that submarket there. Billington, Washington, Tacoma. Yeah, Tacoma is outside Seattle, Lakewood. All right, so I will do my research. So yeah, CoreLogic is very credible. Their home price index features very deep, very broad coverage of data for many years. So I trust their sources. So overall, my takeaway is that yeah, I mean, not only CoreLogic, I suspect some other sources will, credible sources, they will probably have a forecast similarly, very soon. Everybody doing a 2023 housing forecast, for better for worse. I like to be optimistic, and again, I can only be real, be transparent, and I stick my opinion because I've been doing this for a long time. For almost 4 decades, I've been doing real estate. So I've been through many up and down cycles. So I lived through it. So a lot of people have not lived through it, and they profess to be real estate expert for whatever. But then again, so it's just my opinion. My opinions could be very strong at times, but because I lived through it, I've been through the school of hard knocks. Let's put it that way. I have properties and invested in many different areas in the country. And my investors that follow my specific advice, they we have done a lot of research over the years, and we have local teams in many markets that can accommodate out-of-state investors to buy cash flow properties. So I know from big picture many markets over the years. Yeah, so my opinions are strong because some of the resources that put out real estate information, they're not very credible. They are very, very inaccurate, very misleading. They are clickbait. YouTube videos are all about crash videos, right? Just garbage. Garbage. You want me to spell garbage? Garbage. Did I spell it right? Anyway, so my goal is to prove out very good, high quality, authentic, real contents, and back it up with this third-party research organizations such as CoreLogic, Zillow, or Redfin, whatever, and so forth. But that's how it is. So anyway, I got a lot of things to produce every single week. So hope real estate investing information, as well as for the regular folks out there buying their primary homes in whatever market they're buying. So hope if you see value from this presentation, please smash the like button and subscribe to my channel. And finally, subscribe to my newsletters on the link below, so you will become a free member of our real estate community. It consists of thousands of members that receive weekly realistic, practical real estate investing information on your email inbox, so you could potentially become a very successful real estate investor and invest for the long term. Does that make sense? All right, thank you so much, and have so much information to put out every single week. So stay tuned for my YouTube channel and learn and get educated the right way. And finally, you have to take action. Do not go through analysis paralysis. Learn the market well, learn a specific area well, buy your primary home, buy your investment home, and then take action and invest for the long term. This current correction market, is going to be okay. It'll be fine on the other end. So just have a long term perspective, show discipline, show commitment, and don't get scared. Don't get paralyzed. Don't get brainwashed by all these negative headlines out there. So they are clickbait videos, uh, realistic porn, realistic. Oh, I mean, there's a word for it. Fear porn, real estate fear porn is all over the place. Oh, so disappointing. Okay. Anyway, I'll see you in the next video. Thank you so much for attending. Have a nice day. This is Yi. Bye bye.